We're on the move. One of many lives that we're going to be doing like this. The markets. Now, I don't know if you can see how clear it is, but never mind. You know something? NASDAQ is currently at an all-time high. Wonderful. And everyone has been asking me this question. Tino, when is the market actually going to start pulling back? Well, according to ratios, the stock bond ratio is showing that stocks are overvalued. Now we've got price earnings ratio, which is also showing that stocks are overvalued. So yes, welcome Juicer. How you doing, man? So that's where we are right now. Now, what's fueling the optimism across the board is, of course, trade talks. Now, you're obviously aware that Canada didn't really do too well with their trade talks. Trump says we're not going to do any business. We're just going to chuck a good old tariff onto them. And that's exactly what the story is there. So we've got that problem. Euro, nothing much is happening behind that. However, you obviously know about the One Big Beautiful Bill Act. Now, Trump has obviously successfully managed to get it passed to the Senate. Now we're just waiting for the rest of the gang. He's been met with a lot of resistance. And the problem is, if he actually does do this, the actual big, beautiful bill is going to inflate already existing bubbles. And one bubble that we're talking in particular is, of course, inflation. Okay? Mad love from Los Angeles. How you doing, guys? How you doing? I don't know if you can see me. So, you know, snap out in the world. Yes, you know what? It makes a change from being stood at a desk all day. I'd rather do a live while I'm walking. So that's where we are with that. But anyways, moving on. You probably noticed that the NASDAQ is currently trailing at the all-time highs, very close to that critical milestone of 23,000. Now, again, I've said this many times. Make sure that you're focusing on the volume. The volume itself for the NASDAQ is starting to deplete. And if we're not getting the commitment from... Wait there. I'm crossing the road, man. Anyways, if the volume's not going to be appearing at points where you would naturally be expecting it, okay? What's your problem, man? Anyways, if the volume's not going to be appearing at points that you would naturally be expecting it to appear, then that grants the question, should you be buying? I mean, look, buying at these all-time highs is categorically the worst thing you can do. However, it doesn't mean you don't buy anything. What it means now is you've got to prepare yourself for diversification. That's what's got to happen. You're preparing yourself, because when prices of assets are appreciating so much, the wrong people are buying at these highs. The right people are selling, which means that they're taking money out of current assets that they've got, and then they're going to start moving into hedgeable asset classes, such as gold. If you look at gold's price, currently taking a bit of a tumble to the downside. Everyone's trying to make sense of gold's price in the sense where, hold on a second, we've got interest rates due to be cut soon. So why isn't gold's price going up? Well, what about geopolitical tensions? Where's that? Well, there is no geopolitical tensions. This Iran-Israel war has now gone all quiet, and now everyone is focusing on the big bill. And again, the big, one beautiful big bill itself, it's a trigger for disaster. And I say that because of where we are with interest rates and, of course, with inflation. So you start now increasing the US deficit by 2.4 trillion over the next 10 years. The market's going to price that logic in now. And that's the madness of it. And I've said this, that the only time that we're going to see the next major event that's going to cause markets to actually pull back is the Fed pivot, when the interest rate cuts come into play. Don't worry about the coffee, man. It's all good, you know. We'll try and arrange that sometime. I've got to get to the States first. What's the local talent like over there? This guy. No. Let's dump 30% in the markets. Listen, July the 4th is going to be a very interesting time. But also, guys, the market itself is going to be very lightly traded. A lot of people are actually vacating. I don't know where they're going. The people are going to wherever they're going around the world, especially in the US. People are spending time with their families for this July 4th weekend. So you're naturally going to see light volatility. But you've also got to remember that this week, we have got the non-farm payrolls coming out on the Thursday. So it's not coming out on the Friday. And from a price action perspective, logic says that they've only got 4 days to actually start moving things. And if they want to end up moving assets to wherever they need to move them, in other words, volume needs to start coming in to whether it's into utilities for the stock market, tech market, or gold, commodities. That's where you've got to be mindful of that this week. It's going to be a very volatile time just because of the data that is being pushed forward one day, and the market isn't going to be able to maneuver the way it wants to because it has less time to do it. You know, Tino showing his vector print. He's showing no vector print. Any questions, ladies and gentlemen? So listen, Bitcoin. A lot of speculation with Bitcoin right now. Bitcoin is currently holding in and around that 107 region. But one thing you do need to take into consideration with Bitcoin right now is there is the vectors down below. I'm a little bit cautious with that because anything can come out that could actually cause volatility in Bitcoin to go down. The ETF is going in accumulation mode and it's moving up very fast. So that's something you also have to pay attention to. More so, adoption with Bitcoin, happy days. But for me, the likeliness of Bitcoin claiming its all-time high again, I mean, if we're going to go on terms of probability, I'm looking at a 75 to 85% chance that that is going to happen at some point this week. Tino, USD JPY weekly time frame shows a clear head and shoulder. Do you know something? The dollar value right now is so undervalued. The worst thing about it is that this new big beautiful bill, if it gets passed, that is going to undermine dollar strength again. Euro will continue to move up. Dollar will continue to move down. The bonds are going down, but also not bonds are going down too badly, but the yields are moving down because of the expectation of interest rates being cut. But the problem that we've got is the bonds market is actually so undervalued that is causing a bit of a problem for the marketplace because investors turn to the bonds market to understand, do you know what the fuck is these flies, man? Why? They've got so much space to fly and they decide to come to me. What is different about me right now? There's people there. There's a dude right here. The bonds market is a true representation of investors' belief in terms of high risk and low risk, okay? When you're loading up on Circle, listen, Circle is a long-term play. It doesn't matter what price you're buying it at. It's like as if you're buying Bitcoin. That's how I see Circle. And if there is no stabilization in the stable market, stable coin market, okay, and if it's met with legislation that can cause a problem, then you're going to have an issue with regards to Circle as a stock. But with the backing that it's already got and the most successful IPO for a cryptocurrency-based company, that is just a long-term game that you're going to have to just continuously keep on accumulating, in my opinion, because accumulating stock, it's like buying Apple, it's like buying Microsoft, okay? The service is going to be used there. And that's something you've got to take into consideration with it. I mean, look, Coinbase is now being compared to the idea of it being the Amazon of cryptocurrency in terms of services, okay? So that's where you are with that. Have I brushed my teeth today? Of course I brushed my teeth today. When you come out in the sun and you get a little bit of a color, everything gets heightened up. I look skinnier in the sun, yeah, because I'm depleting out here, man. It's too hot. Header there. Header there. Yeah, this fly is starting to piss me off. The wife has entered the stream, ladies and gentlemen. Did you go on vacation to dodge NFP? Nah, I'm still going to be here with the NFP. Listen, data coming out regarding non-farm payrolls and the US economy, that's why everything's going up, because investors are like, if the US economy can absorb these high interest rates, technically it doesn't matter if the interest rates get cut or not, because we've been absorbing the high interest anyway. You're going to get, listen, it's circular, right? Financial stocks, they're always going to see the success of the interest rates being high. That's banks, okay? That's always going to be the case, because people still need to meet their demands for the loans that they've borrowed. They will always meet those demands. So that's all you need to be looking at. Financial stocks when interest rates are high. When interest rates are low, then what you're relying on is you're relying on financial companies to be offering more services, okay? But right now they're not offering that many services because it's too expensive, but they're still honoring those debts. Here we go, we've got a question here. Powell speaks at the market open tomorrow. Surprise cuts. Do you know what? If we do get actually surprise cuts, that will rock the markets. Be mindful of it. If they cut the markets, right? If they cut the interest rates tomorrow when Powell speaks, which is very unlikely it's going to happen, I don't think they're going to do it. I mean, I'm looking at the one big beautiful bill. If that gets authorized, okay, and it comes into play, then there could be a surprise cut. Because if it's naturally going to increase the deficit, the only way that you can offset that is by cutting the interest rates at speed. Now, the one big beautiful bill, it's not going to happen overnight. That's something you've got to take into consideration. It's not going to have an impact straight away. If they're saying it's going to increase the debt by 2.4 trillion over the next 10 years, would you expect that the day it gets converted into bill and it's passed? Nah, it's not going to have an impact straight away, but the market will react to it. 5 months, Trump's lost 4 trillion Bitcoins. Bitcoin, okay. Standing in the sun instead of the shade and whine about the heat. I don't like the heat though. Sorry. Right, any questions other than that, ladies and gentlemen? Here we go. I'm an economist. Trade war was stupid. Tariff of difference would be nice. Income 500 billions, lost 50 billions. Listen, if we didn't have high inflation, tariff wouldn't be a problem. That's the truth. We wouldn't have this problem with tariffs. I mean, with inflation, because inflation is on the trajectory to go down. Thoughts on XRP? It's a violation to anyone's wallet. That's what XRP is. It's a violation to any investor's wallet. If you want to push someone in at the deep end and test them psychologically in the games of investing, you get them to buy XRP. Get them to buy one XRP and they'll understand. Tino, when is the Fed cutting the rates? I think if they pass the bill, okay, I think that they're going to cut the rates. And I'll be frank with you, I don't think that the Federal Reserve will be irresponsible to start cutting the rates on a whim. I don't think they will. They're probing the markets and making them believe that it's something that's going to happen. But the thing is, they need to get the yields down. And the only reason why the yields are down is because investors' expectations of the future aren't looking good. So the only way that you can get the yields down is if you encourage optimism across the board, which is what's going on. The Iran and Israel war, that's starting to go down. Nothing's happening with it. Oil's price is flatlining around the 67 mark. So if oil's price is staying flat, investors don't need to worry about cause for concern. But if the yields are coming down because investors are stepping into bonds, then there's no need to cut the rates. And that's what the Federal Reserve is looking at. If the yields keep on shooting up, that's how you force the rates to come down. That's how you get the rate cuts. And then the yields naturally will come down. I don't think that the dollar dominance is going to stay cheap for long. I don't think it will. I don't think it will stay cheap for long. And that's because everyone works in dollars. But you'll then be able to convert a huge amount of euros into dollars, which will then spark a dollar rally, which will naturally inflate the stock market. Because what will happen is investors will be forced to go and sit in USD cash. So then that brings the value of the dollar up. The stock market slumps, the dollar goes up, the yen goes down because the carry trade comes into play, because they can buy lots of dollars off the back of a cheap yen. And then, of course, dollar goes up to a significant point, what appreciation of like 104, 105, then the stock market will start to climb higher at the same time after it's corrected. But the stock market can move much more faster than the dominance of the dollar, because you've got to remember, dollar dominance is made up of a basket of assets. So you've got to get money out of euro, you've got to get money out of yen, you've got to get it out of pound, you've got to get it out of Swiss franc. So not everyone's going to have the same expectation of it. Here we go. Priest, what's good? Now I think they will continue to buy Swiss franc with negative bond yield. Of course they will. Because they know that's not going to be sustainable for long. You reckon I should sell some GBP then? Listen, euro strength, dollar strength. Look, anything against the US dollar right now is naturally going to be increasing in value, okay? You would have to exchange a significant amount for you to actually see the benefit from a retail perspective. Now, I'm not talking about going to your local bureau de change and be like, I want to change over £1,000 into dollars. Yeah, you might get a couple of points benefit, but they've already priced in their commission, so you're already behind anyways, you know? So, what else you got? Bloomberg predicting 1.4 against the euro. Bank of America 1.5. Goldman Sachs, they were looking at 1.6, but then they retracted on that. So it's I'm expecting euro to hit 1.2. I'm expecting it. Traders, Tino, Jay Powell is playing politics, prefers the Dems than the ladder. Doesn't matter. Doesn't matter what he thinks. I think he's hiding behind the idea of it being politics, but he knows that if he's going to look at it from a analytical point of view, okay, and he judges the US economy based off the data that they've got, okay, then this week's data, you got ADP non-farm employment rate coming out, the unemployment, sorry, you got JOLTS job openings, you got the ADP coming out, and look what happened last time when we had those two readings. And when the non-farm payrolls came out as a surprise reading, gave everyone the shock of their lives to say that the US economy is still doing fine. So you've got to be very careful with it. 1.2 is crazy. I wonder what the price of oil will be at this point. You've got to focus on the relationship of dollar and oil. If dollar goes down, oil goes down. What you need to see is oil going up, dollar going down. But what you've got now is oil holding, dollar down. And then you have been seeing oil down, or dollar down. When you see the dollar going up against oil, okay, that's the nice relationship you want to see, because equally oil goes up, dollar goes down. But the problem that we've got right now is we've got such a cheap price in oil, and we've got a weak demand. China isn't doing nothing. Their economy is slowing down, and they're one of the largest consumers of US oil. You've got Canada, that's one of the largest producers of oil, and they're loving life right now because USD CAD, it's doing great. But then with oil's price down, it's kind of like cutting them up a little bit. I am flipping melting, I know I am. Doesn't mean pivot and crash. It's not actually bullish short term. Ladies and gentlemen, listen, look at your portfolios, and when you do invest, this is what I was told. You have to look at the portfolio that you're managing on a quarterly basis. Now, depending on the volatility that is surrounding your portfolio, if your portfolio is made up of defense-based stocks, okay, then quite frankly, you're looking at it from a year-to-year basis. That's what you're doing, okay? If your portfolio is filled with tech stocks, you'd be looking at it on a week-on-week basis, okay? And leaving it a quarter you do set yourself up to quite a lot of volatility within that time. Depending on the industry that you're investing in is going to dictate how realistic your expectation of returns are. The thing you want to look for is this: anyone that is subject to interest rate changes and big influence of that as well, that's where you then look for volatility in the stock market. You look for that in the tech market, because we're so close now to getting the rate cuts. The tech market is going to be the only one that actually survives and does really well from the benefit of cutting the rates. Why? Because the yields going down means the stock market goes up. Tech stocks are subject to interest rate changes. They're subject to changes in the yield. And that's what you've got to pay attention to. Why? Because they borrow so much money to put all of this equipment to work. They got to buy so much, and they can only do that with investors' funds and borrowed money from banks. Borry will always be short in the market again. Of course he will. Yeah, I'm not going to go to the beach. If they cut rates, don't expand balance sheet. Is it still a pivot? Yes, it is. It's still a pivot. Pivot comes with changes in interest rates. If it's 4.25, 4.5%, then it goes to 4.5%, 4% to 4.25%, then that is a pivot. And pivots always, just all of you right now, just go and Google Fed pivot image. Go and do that. And you will see that the Fed, when it pivots, the market always does correct. Skip Nova, what's good, man? You didn't have to do that, my bro. Thank you so much for that. And this fly is really winding me up. Late a bit. I'm late, but you know what? I'm still here. So technically, 3 months swap spread should go higher sooner, right? Correct. It should, in principle. Bitcoin up or down? Bitcoin up or down? You don't care about up, you don't care about down, but I always say you should only be caring about movement. I think right now, Bitcoin is all about accumulation, in my opinion. You have to just only get accumulation of Bitcoin. It can be a bit difficult to trade when it goes sideways. Everyone speculates Bitcoin's going to go up, it's going to go to this price point, it can't go to this price point. Fuck that, it doesn't matter. If you can exploit any 2 to 3, 4 grand move in Bitcoin, you should be winning. Happy days. I ain't in Bristol, bro. That's an XRP fly. Bloody annoying, of course. Any other questions, ladies and gentlemen? Try to keep this live nice, short and sweet. It's only 18 minutes, so it's happy days. Thinking that Powell isn't political is laughable. Is Powell political? Do you know what I think? I think Powell is hiding behind the idea of the mandated goal of keeping price stability and, of course, in prices and the employment market thriving. That's it. Keep prices low and keep people employed. That's all he's trying to hide behind. You don't think he wants to say something about Trump calling him stupid? Come on, man. Of course he does. Delta Airline now accepts XRP. Doesn't help me. Trump slated Powell and the biggest up crypto on his speech, and the biggest up crypto on speech. Yeah, because he said Bitcoin is great. But Trump has been saying that plenty of times. You know? Trump and Powell trying to control the narrative. They are best friends forever. Yeah, probably. Which one of your masterclass sessions is your favorite? My favorite masterclass session would have to be the V-shaped reversal one and the first vector above the 50 EMA. If you haven't checked out the masterclass sessions, go and check them out. And if you're not part of the Platinum membership, get involved with that, because with that, you're going to understand how to put together the macroeconomic data and all the influences that are surrounding everything. I mean, we had a nice projection over the weekend on the weekly review, gave everyone the projection on Bitcoin, Solana, and Ethereum, and we came through nicely with that. Ethereum was a little bit tricky, but Solana came through nicely, but she was already making a move up anyway, so it was a nice little flavor. But all of that is in the description, ladies and gentlemen, so go and check that out. Oh, why is the policeman looking at me? Oh, well. XRP swap for Platinum member. Oh, God. Stay hydrated. Any other questions, guys? I'm just going to try and keep this one sweet. A couple of more questions and then I'm out, guys. Tino filling gaps down on the corner? No, I'm not filling no gaps. Come on, man. Give me something. I'm protesting in the streets. Yeah, don't buy XRP. No, they won't sell any XRP. They wouldn't want any XRP here, for God's sake. Have you liked the stream? 700 of you. And play of the week. For me, guys, the play of the week, I would be focusing this week, right? You want to be paying attention to USD, JPY, and Euro. Why? Because you've got data this week that is only going to be impacting those two currency pairs. Everything else will just be a follow-on of what's going on overall, in my opinion. That's what you got to focus on. Stick on the 1 hour time and play a swing trade as well with Euro and USD, JPY, okay? And only trade them during the Asian session. That's where you're going to get the benefit from it. Trade it at the Asian session. I'm all right, Super Run, man. I'm all good. I'm all good. Did you take your Speedos? Now, we don't do Speedos, ladies and gentlemen. We skinny dip, okay? We don't want compression in that area. We just want to go free roam, straight in, and play it like that. How you doing, man? Hello. You good, yeah? Cool, man. You didn't buy me a drink? No, I'm good. I'm joking. I just violated this guy for no reason. You're just staring at me, wondering what am I doing. He thought I was videotaping him. And bless him, he's over there, that guy. I just asked him for a drink and he just said yes and just walked off. So, never mind. I don't know where I'm going, ladies and gentlemen. I really don't. I'm just walking. Someone keeps finding. Glad I've been watching Tino for some time or I would have gotten liquidated. It's nice to know that. Here we go. If this is the last question. If there will be a change in monetary politics soon, do you think that actually can see Bitcoin dropping 15-20% and the SPX the same? I don't think that if there is a change in politics, you've already had the change in politics. I mean, let's be honest, when Biden was around, everything was doing great. You got an all-time high with Bitcoin. And of course, with Trump, you've also had an all-time high as well. Are we going to get more all-time highs? Maybe. The possibility is there. I mean, I'm saying 75 to 85% chance that Bitcoin is going to hit the all-time high this week. There's a good chance for it. The only thing that could change that is if there is a switch on this story with the one big beautiful bill. If it doesn't get welcomed and they don't pass it, that's going to be good for the market. If it does get passed, then the market's going to be like, sorry, that's not going to be good. So assets against the US dollar will go up. That includes Bitcoin, okay? Tino made me $2,062 from these last 3 months on a $600 account. Happy days, man. Doesn't matter where you're going, yeah. Do you think Circle has bottomed? Not yet. This week, guys, listen, I would only... Look, this week, quite frankly, you want to be very careful with what you're buying, only because of the data that's coming out. Use this week to let the market manipulate itself, because you've got non-farm payrolls, ADP, and investors' expectations that the US economy is doing really well given the current circumstances, okay? So as long as you sit through it and wait to see how the market is going to react to this information, next week would be the good time to start accumulating assets. But I'm telling you now, NASDAQ is at all-time highs and they may correct pretty aggressively. Then it all depends on the expectation of interest rates. The longer they delay on cutting, the higher the stock market's going to go, because they will be riding on the idea of anticipation of a rate cut. So they will continuously keep on pricing that in. So just make sure you're aware of that. You are going to get a 20% correction in the stock market. Hands down, most definitely. That's my logic, because you can't expand for such a long time without any short-term piss off, without any short-term contractions, because the valuations of stocks are just so high right now. Buffett's buying Japanese stocks. You ain't hearing about buying any US stocks now, do you? Who's buying US stocks now? It's absolutely wild. You just don't want to do that. Yes, he did leave the market. Warren Buffett is right now in Japan, and he's buying up Japanese bonds, and of course he's buying up Japanese stocks. They're going to increase their interest rates soon. But you've got to understand why that's important, because it's a cheap asset. You increase your interest rate on a cheap asset, it's not expensive for you to consume. So when you've got such buying power like Buffett has, smallest changes in interest, whether it's higher or lower, he's still making money from it. You know? You know what, ladies and gentlemen? Too late, dum-dum. What's this? Buffett farming yields. He is farming yields. If you look at the CME rate swap on the Japanese yen and the euro, it's disgusting. You're picking up yield all day. All right, and have you liked the stream, ladies and gentlemen? No, you haven't. 700 of you, and you still not like the stream. Check out the Traders Reality website, ladies and gentlemen, for more information on the hybrid system. That's what we use. We've got no charts today, and I'm not going to be doing charts during this time. I'm just going to be talking to you, give you information. Today's live is a little bit longer, but what we're going to be doing moving forward, I'm going to give you the flavor, give you some price points to pay attention to, what news has come out. It's going to be impromptu as well, so I'm going to be doing these lives every day at the normal time, but we're going to try and keep away from the charts. You've got the charts in front of you. I'll just give you the flavor and the information. You put all of that together. You know, I don't have vacation, ladies and gentlemen. I don't have vacation. AI generated background, yes. It is AI generated, to be honest with you. I need a drink, man. But yeah, other than that, gang, mad love and respect. And I'll be chilling. I'll be sending you guys a video tonight. Don't worry. I'll sort you out with something. I'll give you a market breakdown. All right? Take care of yourselves, gang. Mad love and respect. And I'll speak to you all later. All right? Peace.